Are small business loans based on personal credit? Many entrepreneurs start their journey with business ownership and think the only way to get a business loan is to have really good personal credit. While that might be true in certain situations, it's certainly not true in every situation. Make sure you watch this video all the way to the end to find out about loans that don't require personal credit. In this episode, we'll discuss different types of business loans and what typical requirements lenders have for those loans. Next, we'll discuss how personal credit might be a factor for certain types of lenders when it comes to business loans. And then finally, we'll discuss alternative financing for business loans that do not require a personal credit check. I can tell you firsthand that one of the biggest hurdles that entrepreneurs and people who start businesses find initially when they first try to get things going is going to be funding. Funding is a huge issue for small business owners. Getting funding, trying to launch their business, figuring out how they're going to stop their full-time job and then launch their business fully into success. How does that all happen? Well, it starts with funding. It's going to be a conventional business loan from your big box financial institutions like Chase, Bank of America, and whatnot. These types of business loans usually require a proven track record of being successful in business, excellent personal credit, collateral. In other words, they're very stringent. But here's the problem with that. They also want you to have a proven track record, and they also have fairly stringent requirements. So in most cases, entrepreneurs aren't going to have the necessary requirements if they're just starting a business to get those types of business loans. SBA loans work really well if you're already on your way to success, but what about getting to the place where you can be successful, getting the funding that you need so you can launch your business? The last group of loans that I want to talk about is going to be your online lenders and alternative financing. There's a whole plethora of different types of business loans that come from non-traditional lenders. Okay, now in any traditional type of loan application, they're going to have certain requirements. Obviously, creditworthiness of your business and also creditworthiness of yourself comes into play. If you haven't begun to build out your business credit and start establishing credit under your EIN only, then odds are you're going to have problems getting funding in the future. And a variety of other factors that might help them better determine if you're a good fit for their loan product. Now, I mentioned credit worthiness. Now, obviously, if you're a brand new startup, you've got no track history, you've got no sales, there's only really one way to get credit, right? That's going to be to build out business credit in your EIN only without a personal guarantee, without a personal credit check. That's entirely possible. And the other way is going to be to personally guarantee items. If all you've got is credit and you have no track history of being a successful business owner, then of course, lenders are going to question that. You're going to want some type of data to show that you're going to pay them back. Now, before we get into alternative types of financing, please subscribe to my channel and like my video. I'll be working hard to bringing you a video every week over business credit, personal credit, lending, the economy, and other personal finance topics. Okay, now let's talk about alternative financing. Okay, so we've gone through kind of the basics of how your traditional loans might work. Probably going to require a personal credit check, require that you have business credit, sometimes collateral, sometimes assets, definitely a business plan, definitely a history of being successful in business, or having a history of being successful in your career where you have a high income and really great credit. But alternative types of business loans exist, and there's literally dozens and dozens and dozens, but they're not widely advertised. And they're based on credit, they're based on cash flow, or they're based on collateral. Okay, so let's talk about cash flow first, okay? If you've got cash that's flowing into your business, whether it's from invoices, whether it's from a merchant, if you have a credit card processor, any type of cash flow that is repetitive and repeats month after month at a certain level, you can actually get financing based on that cash flow. You can get short-term loans, you can get lines of credit, and there's other types of financing available if you have cash flow. The next thing I want to talk about is going to be collateral. If you've got business equipment, real estate, anything that we can use as collateral, you can actually get loans based on collateral. Again, it can be real estate, it can be equipment, it can be securities, it can be stocks, it can be a 401k. Any of those will get your business financing based on collateral. And again, the final way that you can get alternative types of financing is going to be on credit. And this is what people tend to kind of overlook when they're looking for financing. If you build out your business credit with your EIN only, without a personal credit check, and let's say that you're able to get high limit revolving accounts, high limit credit cards that you can pull cash off of. When it comes to business credit, it's nothing at all to get a $50,000 credit card or a $100,000 credit card. And oftentimes, those credit cards come with 6 months no interest, 12 months no interest. So what's the difference between a line of credit for $100,000 or building out your business credit and having 2 credit cards that have $50,000 limits that are 12 months no interest? Well, I would dare say that the credit cards with no interest are probably the better deal. So people are so busy trying to get these lines of credit and get all this funding directly into their account that they may or may not use, that they overlook the value of having business credit so that you can grow your business and get funding for your business that way. You can get all types of funding for your business just by building out your business credit appropriately.